Hi, a lot of our investors are curious to know what is blockchain, what is tokenization, how is it going to affect fractional ownership, or how is it going to affect real estate per se? And to answer all these questions, today we have Mr. Surya Gedela with us. He is the founder and CEO of Reapp Technologies Private Limited, and we're going to have a detailed chat with him about all these things. Hi, this is Raj Shah. I am from Invest in Pre-Leased, where we help you profit from curated pre-lease proposals. And with that, I'd like to welcome Surya. Hi, Surya.
Hey, hi.
I'm going to get into a bit of a background about what Surya does, and that's the reason why we've got him. So, Surya is, like I mentioned, founder and CEO at Reapp Technologies Private Limited. He's got a passion and drive to build enterprise level technology solutions. He brings a rich and diverse experience of 10 years plus in core banking, insurance, and low code product development segment. He's an avid reader with a vision to reshare the unstructured and irregular landscape of property market in India, which is what we are interested in. And of course, he has keen interest in emerging areas of law like blockchain, Proptech, low code, no code development, financial technology, and sustainable energy segments. So, Surya, thank you for joining us. We are very excited to have you. And to start off with, my first question is, what are the top three or top five concerns that an investor may have from a perspective of real estate investing?
Got it. So what I observed primarily in this segment from past couple of years is to create an affordability. First and foremost, one is to create an affordability to invite into the asset investment and provide an accessibility where a person like me sitting in Hyderabad can can invest in Mumbai or Pune, and at this stage, it's not possible, right? And which means I'm talking about the diversify my savings in solid asset class like commercial real estate or a typical real estate, right? And the third biggest one is the liquidity. And we all aware that the liquidity is not that good enough when it comes to liquidity assets like real estate. And that's what the exact problem that we're solving. We're trying to solve creating an instant liquidity. I'll talk about how and why, how we do it. But yeah, that's the third. Fourth important one is the trust and transparency through creating a security layer. Since we're talking about blockchain-based tokenization, the primary objective is to solve out the trust and transparency by creating a trustless layer or trustless ecosystem, right? That's where blockchain come into picture. And the fifth most important one that people were trying to ignore is that a simplified experience, right? Because as a person, they really don't want to go inside of it. Like they want a better experience to understand. And that's what I'm talking about.
So when you're saying experience, you're saying, talking about the user experience when they get
Yeah.
on the app, or
The entire investment life cycle as an experience. It's not about app. It's about the process. I know how the
Got it.
process is simplified through the day one of investment to the last day of exit.
So you mentioned affordability. That's very interesting, and we also believe that it needs to be affordable. We have fractional ownership ranging from 5 lakhs going up to 25. Most of them are at around 25. There is something at lower also. But what is that one price point that you have in mind that you would call it as affordability?
As this tokenization process, we can bring as low as $10, even 500 rupees, literally,
500
and
rupees.
be done since we deploy tokens. But in our standard, at this moment, we're thinking to go with as low as 10,000 rupees.
Got it. Okay. So 500 seems to be a great benchmark because mutual funds is something that everybody is aware of, and a big chunk of the population is investing in mutual funds. They are probably for the reason that you've already mentioned, that's affordable, they are accessible, they help them diversify. There is
Yes.
liquidity also. And of course, the overall experience is easy because you go on maybe XYZ platform, you've been advised, or you do your own research, figure that out, and then you invest. So absolutely true in terms of drawing a parallel to an existing success story in terms of mutual funds. So we will now get into how it can be possible for real estate. So it's interesting that you mentioned these things. How are you trying to solve these issues?
Yeah, as I mentioned, the most five problems that I mentioned earlier. If you see, there is a mirror effect between the mutual funds and the tokenization that I'm talking about. The same problems which are solved by mutual funds, even though it's publicly traded and there is a regulatory body for that. At this moment, we don't have any regulatory bodies when it comes to fractional real estate or even tokenized real estate. Hardly there is a difference between these two, except the security aspect. That's where we insisted towards answering the biggest question: how my funds are safe. If anything goes wrong, who's answerable for this? That's where the DLT come in picture. As I said, DLT is nothing but a decentralized.
So Surya, you mentioned the things that you've mentioned. So how are you trying to solve the problem, or what do you think is the ideal solution for all these concerns?
Exactly. So that's where asset tokenization come into picture by solving primarily the affordability to create diversity, and by creating a structured security layer, and also providing instant liquidity by creating a sophisticated, simplified experience.
Okay, so what does that mean? How is this going to be executed? When you're making this digital, currently our system is in fractional, that the signing of agreements, etc., is online, and post shares and all of that are offline. And the shares are with a debenture trustee. The debentures are with the debenture trustee. So now here, drawing that parallel here, what's going to happen? You had mentioned tokenization. Is that what's going to happen?
Yeah, we're missing one key aspect when it comes to traditional fractional real estate and asset tokenization. It's as similar as both structures were saying. There is this two parts: the traditional and the digital, or blockchain. So why do we need to even use blockchain? That's the biggest question when we
Okay.
use the same given.
Before that, the big question is, what is blockchain? If you could explain it to us in simple terms, what is blockchain for all our investors?
Okay, just to get a simplified understanding, blockchain is a distributed ledger where we can see the ledger book that was maintained by account in a business, whereas they maintain it in private way in that particular in their computers itself. Whereas this is like think of this is like public; it's available for everyone. It's there and it's shared in like lakhs of computers at the same with and by connected with one computer to another computer, we call it as a node. The reason behind why we use blockchain, the public ledger, is to making sure to not to tamper the data. When we talk about a private ledger, it's easy to tamper the data, it's easy to manipulate information without letting anyone know. Whereas in public ledger, yes, you can still do that, but it's still timestamped. When it's timestamped, it's very clear that okay, someone done this manipulation or edit, so that it's easy to track, and it's immutable to change. That's the biggest advantage of blockchain.
What do you mean by immutable to change?
Immutability is nothing but once any entry that was printed on this ledger, uh, it's impossible to change that ledger. Why? Because when you try to change that, the entire blocks, connected blocks, there is a unique address. So that address immediately changes. When the address changed dynamically,
Okay.
it's impossible to change that number. It's recorded. Think of this. You written a note on a book and you saved this book for 100. Go back and see the book. There is entry. It's there. It's permanent.
Okay.
But in digital, what happens is you have a great flexibility to edit, but no one records it. You easily change it. Yeah, that's what blockchain is meant to be. And blockchain works like a digital book that cannot be changed.
Okay. No, so you mentioned that in digital it's easy to edit. But are you
In
saying
a current system, without blockchain, in your
without
public,
blockchain? Okay.
yeah, without blockchain in current digital systems, as example, I'm using my account system as software like Tally or Zoho book, I can manipulate. No, who are right? When it comes to say that, okay, your book is in public, yes, you can change, but it's recorded. So it's there,
Got it. So let's take an example of, let's say, fractional ownership. We create a particular entity, in this case, let's say a private limited company, and you put it on the blockchain. So let's assume there are 200 investors. All these 200 investors, are you saying, will be able to see exactly when it was incorporated with a timestamp, and it'll have so every ID or every
data.
every step that is being taken will have a unique ID.
Yes.
Is that so? Is my understanding?
The entire data from setting up an SPV and their instructions, when they did set up, who's the board members, every data recorded on blockchain.
Got it. So that entire data is going to be available online, and it's going to be accessible to all these 200 people. Now, when you're saying it's a public ledger, just Can a non-investor see this?
No, because it's converted into a encrypted data. When it's in public, it's there in public, but it's in encrypted. So you cannot read the data. That readability only can be visible for the people who invested in that asset.
Okay, so only if you're given it access. So
That's
more
what
like
we
it's
call
on
it
the
as
cloud.
anonymous. Yeah,
More like it's basically
it's a
yeah.
cloud, but lacks of computers on cloud.
Okay, and restricted access basically. So it will only be for those specific set
No,
of
it's not
investors.
restricted. The data is still there, but there is a concept called anonymity. Anonymity means as an outsider of this system or this fractional investment, I cannot read that information, but the data is there.
Okay,
It's
so
encrypted, whereas the data is only visible in their dashboard or in their front end. Yeah, it's visible only for the people who's investing.
got it. Okay. When I meant restricted access, what I meant is only it will be shown only to investors. Okay,
Exactly,
got
you're
it.
right.
Okay, got it. Oh, it's very interesting. Fundamentally, you're taking what is already existing and you're digitizing it in a way that it's accessible, and also in some sense, if I therefore then if you're giving me a small part, can I, is that then tokenization, that small part or my particular fraction that I own, would you call that as a token?
Yeah, it's a unit. In traditional fractional real estate, we call it as a debenture unit, right? If I buy a CCD, a unit, number of units that I buy, right? This unit is mere representation of a token in digital ledger.
Okay, very interesting.
It's
Can
basically
I,
a value added token that traditionally represents this unit into a digital form. That's all.
okay, can that token also hold any other information, in the sense that is it only debentures or it could also own 10% equity, which is currently what the structure is for fractional?
Yeah, that configuration can be done in the backend based on who issued the tokens. Or imagine it's a traditional debenture system on public blockchain that's having the same process, but with more feasibility, more creating more trust and transparency.
Okay, all right, that does help us explain, help me understand what blockchain is and what tokenization is. So Surya, you mentioned about very briefly on the legal aspect of it. So I want to ask you, what is the legalities involved and what are the differences from a legal perspective when you're talking about converting, let's say, the fractional into a token?
A good question. In fact, we follow the legal structure. We're not making new regulations or anonymity-based legal issues. So what we do, we use our existing Companies Act and regulations as a traditional, and then we leverage this blockchain technology just to create this traditional tool as a wrapper. We call it as a legal wrapper. It's just a digital representation of legal structure which is existed in private limited company, right? We put that in the digital format, and then that gives you a voting right, just like how your typical equity instrument gives you voting rights. So here it's an experience where you get a digital and you get a visibility of the entire statements of that private limited company, all that structure. We just connect that through a concept called legal wrapper.
Okay, so for all our investors, currently, as you may know, most of fractional ownership companies are using private limited as a structure, and a
Yeah.
few of them are using LLP as a structure. And if you want to know a difference, we have another video. It's a long video, but it tells you completely through the lens of a company secretary and a lawyer what are the difference between a LLP and a private limited structure, and which is the one you should opt for. Of course, the easiest answer is just simply call us and we'll tell you before you make the investment. But coming back, you mentioned about the legal wrapper. So could you explain a little more about what that legal wrapper is? Is that a technical thing, or as somebody who's investing, does that matter, from an application perspective?
Think of this is the existing legalities that we have, as you mentioned, talking about private limited issuing debentures or LLP issuing ownership percentage. Currently, it's controlled in central way, right? Whoever set up that company will get to know or tell you that, okay, here is your CCD, here is your coupon, here is that, this, right? But it's a manual process between investor and this fractional company and this asset. There are three parties. What happens with legal wrapper is that it brings you everything and put it in again public blockchain to making sure you don't need to ask fractional company what is my voting percentage. You don't need to ask. System provides you that here is your voting percentage because you invested 10% of investment in that private limited company or LLP, and that works honestly. You don't need to call them, ask them, they'll say that 24 hours I'll come back. You don't need their real time. In fact, this legal wrapper not only help you to understand the structures in that private limited company, because there is a process that they need to update the data real time. And as a key question, what is this app? Why as an investor it helps you? The biggest question is, okay, when I invest like 20 lakh rupees or even 10,000 rupees, where is my money going on? Obviously, they provide you an escrow account, but can I see that escrow account? Because we're all investors, right? That's where legal wrapper provides you. Legal wrapper provides you a real-time update on what's going on that their company's escrow account. It connects with the bank, the bank that opened the account, right? It connects with you every second they talk. This wrapper talks to you bank, and the bank gives you data, statements, real time, so that you as an investor will get to know how the money coming in, who's adding that money, and who's taking that money. When the money is taking back, and with your permission, are they taking money? Are they even informing you? So this is what the smart contracts come into picture. The smart contract will help you to update you real time. So you don't need to ask them. There is a possibility that they may not tell you, but with this system, you have the control in your hand as an investor and retail investor.
Okay, so there is some sort of a dashboard where I log in and I get every information about this particular SPV and what is going on, who's invested what, etc. But that brings me to another question. Who decides how much information will the investor see? For example, of course, as a private limited, I will eventually get to know that these
MCA
are 180 other
through MCA portal. Through MCA portal, I can go to MCA portal.
Yeah, so I could see potentially that these are the other 180 investors with me. But now, again, coming in the context of fractional ownership, can the asset manager define it in their system or in whatever technology they're using? Let's say, for example, in the Ryzer app, can you define that this much information will only be shown to XYZ investors? You will create profiles and say, okay.
No, that's not possible. So the system is again connected with the traditional private limited structure.
Okay.
Whatever the guidelines set by the private limited debenture regulation,
okay,
as per that, the system created. And as a fractional company, we don't have example, as I said, what is the ownership percentage of the rest 180 people? In debenture, the debenture trustee will update you on weekly basis or monthly or as per request.
Yes.
But here it's in real time. You don't need to ask debenture trustee. Still debenture trustee, you can add debenture trustee. It's there. But again, the whole process of blockchain is to reduce this manual process. So it's connected with as per the regulations of LLP or regulations of debenture and the private investor.
Got it. So it is all the rights of the investors are going to flow from the already existing structure of a private limited. Whatever the rights are entitled to the investor, that is going to be available to the investor on that specific platform. Again, therefore, the asset manager may not be able to define it and restrict any kind of access.
Correct. They don't have.
Super. Okay,
that's what meant to be decentralization. When we say centralization, you are giving control to X company, whereas you say decentralization, the control is with users or the investor.
Okay, excellent. You mentioned about transparency, but while I understand from the way you described, this is going to be a public ledger and it's going to be transparent, but no system is foolproof, right? Even people as big as Google and Amazon, they keep getting hacked. So if there is so first of all, question is, I believe there's some sort of manipulation possible. So first question is whether it's possible, number one, or you are saying that no, it's not possible at all. Or second is, if there is manipulation, then how does one go about redressing that, either at the level of the platform or then maybe taking legal help in the courts?
Good. So I'll answer that. So there is a possibility of manipulating numbers, even though it's in public ledger.
Okay.
But the beauty of this public ledger is that it's recorded, right? When you make a number, example, I'll give you a use case. The tenant is paying you a monthly rental of X value, X percentage of whatever rent per month. And then the fractional company said that, okay, you know what, I'm deducting 0.5%, but they have not informed to all 180 investors. But when they change that, since they entered the data in the on-chain, it's recorded, no one knows, right? Then after 3-4 months, one of investor got to know why my rent actually coming little less. What is the reason behind it? They have an option to go back to the public ledger, right, as a openly available as an investor, and check out last 3 months back. What is all they need to do is they run a little smart contract to find out that variance. There is a variant found, right? So it takes less than 2 seconds to find out that variant. Typically, you have to audit that in a private limited company. You have to assign a CA or someone, pay for it, and takes 5 days. But whereas here, less than 2 seconds happen. Instantly it happens. One, that's answered, which means you found out a manipulative entry.
Okay.
Now, how can we sort out that? Let's say, as a investor, I have a voting right, like I have 10%. So immediately I have an option to create a vote saying that I found an issue. Hey guys, all 180 members, here is the issue that I found. How can we address that? Which means there is an uniformity for all investors.
Okay.
Once they inform in the system, again, that information converts into vote. Everyone has to vote. Oh, is this correct? Is this correct? Once they choose vote, it's up to them. 51% consensus mechanism, all the voting, typical voting rights only. It's a digital format. Say everyone said that no, this is a serious issue, we need to take this into next level, legalities, they take. If not, they can sort out with by sitting with the company who created the private limited as a whatever fractional company, which means you have a power. Whereas in the current system, you don't have a power. You are just a passive investor. You have no idea why they're deducting. You have no visibility what they're doing. That's what exactly is sorting out by the blockchain.
Okay. And you mentioned about this particular example. And of course, there could be other kinds of manipulations also, or maybe changes. So this allows the investor to be informed in real time. But tell me if there is some sort of manipulation, and you said you can take it to the next level. Of course, I'm not sure if India has any kind of history of these kind of cases where blockchain, a proof of blockchain has been taken to the court. Has that, in your
No,
understanding,
doesn't matter. It's not about technology. It's about proof, right? You have proof of entry in the digital layer saying that this data was manipulated.
Okay.
Maybe a rental yield was manipulated, and here is my proof. All you need is, as a legal board, you need a proof. Either it is in digital format, either it is in traditional format. It doesn't matter. The proof that you have to submit, and that's in digital, you can submit. Okay. This is nothing to do with blockchain, because as a court, they accept to both formats of proof.
Okay. Now the question is that the court doesn't accept certain kind of proofs, like in as far as I understand, that let's say a recorded voice call is not proof enough.
Yeah.
Similarly, how does that extend? What I'm trying to understand is, has there been some sort of precedence across in any court in the world where they've said that okay, if this is what has happened in let's say on this particular tech platform which is using blockchain and there's distributed ledger and all of that, is that proof submitted? Is there a use case in some sense?
So in crypto world, it happened. It is happening even yesterday. U.S. Supreme Court picked up one complaint, first complaint in crypto side, and it's a good movement. Even India is also picking up use cases. But again, as I said, we are in very nascent stage to understand this technology. So over the period of time, this becomes a foolproof identity mechanism, can be worked out for legalities as well. So I came from little background of regulations and legal aspects. I've been running a forum for legal professionals myself. And yeah, exactly. It's called. So this is again for India right now, and we have group of professional legal bodies. They clearly mention that there is certain laws that we can create to add more to these proofs by adding the traditional legal clauses. Right. So again, it's all about the current legal system can come and find out, is this really useful for them to solve out their problems. Even legal people also try to understand this technology. It's a matter of time. In next 2-3 years, in my view, this can be implemented in most of the sectors.
Okay.
And we've seen that use case even now. India government has started working out land records, digitizing land records. Earlier, land records was there. Now the land records not only in upper private ledger. Now the governments of state level are working on putting these land records in decentralized way, so that tomorrow if government changes that state level, let's say after 4 years, still that records for the people in the blockchain. Whenever new government comes, they'll not change this data. It's there. So that's what the power of blockchain, right? So we have a real strong use case in India, the land records, especially agricultural lands in India. Government of is working on, government of Telangana is working on, Karnataka is working on, Maharashtra is working on. There are a lot of use cases coming in. So as I said, it's matter of time. People can slowly
For
understand
this
it.
app. Okay, super. So largely, if I sum it up, blockchain brings transparency and accountability in real time to for all the stakeholders involved.
Yeah, exactly. That's the whole goal of. So that's why, as I said, consider leveraging technology, but the technology is not enough. You still use the traditional companies acts or regulations and
Right,
add a trust layer on top of it. It's a protective layer. It's not just this. It's not, oh, just because this one came, the technology came, you can't neglect this. You still follow this, but making sure you add a trust layer on top of it to the whole goal of SEBI. I'm just giving you a heads up. The whole as watchdog SEBI. What's the whole goal of their main goal is to create a proper redressal system, right? Making sure the end investors are in safe and sound. And
right.
tomorrow, I don't think so. It may happen in maybe 1 or 2, 3 years. The SEBI can also start using the blockchain to create more real-time redressal systems for mutual funds, for stocks, for
Got,
any private equity or debentures. Yeah, may happen.
got it. Okay. So thank you, Surya. This is wonderful, the kind of explanation you've given us. Now that brings us to talking about Ryzer. So what is Ryzer doing? Is it solving all the problems that you've mentioned?
I can say maybe 90% at this moment, since we are in early stage. We've been working out a couple of modules on this technology, especially system which you mentioned. We've been working out that. The rest was sorted out. Currently, the product is in beta launch. It's available in Play Store, and I will store most probably in a week time. It will be available. And when it comes to product, as I mentioned, the whole purpose of building a product. The main USPs behind this is to create the true decentralized trust and transparency, which is actually missing in this current world.
Okay. And you mentioned a product, but are you also, will Riser also give this out as a service to probably asset managers? Because not everybody should ideally be reinventing the wheel since you've already put in the effort. So would asset managers be able to use your platform, or similarly advisors like us be able to use that platform for a certain asset and certain group of investors?
Can be. So we created an onboarding experience for asset managers who's already in the similar business, the fractional business, or the companies, or even the consultants can start onboarding with us, start onboarding their property, their private limited company, start creating debentures, start issuing the shares and minting tokens. The entire life cycle is available right off the backend system, which is available for us, and we've been looking into partnerships there.
Okay. And what about existing, let's say we've spoken about new opportunities that may come by, but what about earlier opportunities? Let's say I have a set of investors who already formed a private limited, that be converted into this to make it a lot more easier. And
If they would like to create a liquidity, the biggest problem is the liquidity, which they created already. So if they wish to solve their liquidity problem, I would recommend to start onboarding with us, and bringing their or winning their existing investors trust and transparency. This is the right place to do that.
okay. You mentioned about liquidity. We haven't spoken about that in detail, but that's very critical. One of the chief concerns today that we see, because when we are approaching investors, a lot of people don't take decisions because it's not. So, where do you see your solution or the blockchain and tokenization helping
So
in terms of liquidity? And does that impact the sales cycle in terms of from the time I want to sell to the time I manage to sell, or till the time I get money in my bank? Can we try a T plus three, which is, or T plus two, which is there in the case of mutual funds and stock? Is that possible here?
yeah, it is. Yeah, exactly. So before that, let's understand one quick thing. Why do we even create a token when we have the traditional debenture, right? Understand that. The whole purpose of creating token, apart from the topics that I've discussed about trust and transparency, immutability, and all that stuff, because the token is tradable, it's a fungible token, right? It can be tradable, can be exchanged, can be even lent, can be even staked with some NBFCs, right? That's the beauty of token. Because with that, you mentioned T plus T, T plus 1, T plus 2. Here, there is no T plus 1 at all. It's instant transfer. It's real time. It's instant transfer, the way how a crypto token actually works. Whereas I don't want to bring that crypto topic here, but technology is same, right? Even though the mediums are different, the technology is same. So there, you immediately liquidate your token or the value or the economic value of that by selling the token instantly. So again, that's where we've been working on secondary marketplace. Right now, what we built it is the primary market. There are two main primary. Current fractional systems are all primary marketplace, primary marketplace where they issue debentures, you buy, you certain lock-in period is there, keep it with 2-3 years, and then they open 2-3 months once or maybe 6 months once a gate or kind of a place where raise a request to sell your ventures. In this case, in next 6 months, we're launching our decentralized exchange where you sell your token and exchange your tokens with another asset. That's the beauty of it. If this asset is not performing, let's exchange with another asset. So that flexibility is there and it's instantly transferable. When I say instantly, you may ask that, oh, how this order book management works. That's what we've been trying to work with the local NBFCs. We wanted to partner with NBFCs so that they provide a liquidity pool, like they provide a liquidity pool for a period of 6 months or 1 year, and you can liquid that tokens as fast as possible. Again, that's only possible with this kind of systems, because I'm not talking about liquidity pools from India. Imagine that when you tokenize any asset in India, you can even liquidate with other, let's say Singapore liquidity pools. That actually erases this jurisdiction level issue, so that there is more accessibility there.
But that could pose a problem, right? Because
AML come into picture.
because if I sell, let's say, a tokenized fractional in Bangalore as an Indian to somebody in, let's say, Australia who's not an Indian, technically you mentioned about how technology is enhancing what we are already doing. So private limited wouldn't allow that.
No, exactly.
So
So right now we
therefore,
are in jurisdiction level. Currently, we look for jurisdiction to jurisdiction level, which means country to country. There are two topics. So one is this holding a token or a debenture and selling the token or exchanging the token to liquidate it, right? So in order to liquidate, the fundamental question that we answer is to have a pool of funds available to liquidate, correct? So that's where the partnership with NBFCs come into picture. We are in talks with a couple of NBFCs to try to explain how we, because end of the day, what is token or a unit? It is backed when there is a unit or a value or economic value backed by an asset. There are obviously most of NBFCs would like to, even banks would like to go with it. You go and talk to bank and say that, okay, here is my house, would you like to give a loan? They'll be like, yes, obviously. And then if it's a startup, you go and they'll not even entertain you. That's the beauty of assets. That's the beauty of real estate assets.
true. While cryptocurrencies per se, people in a lot of investors have questions about the fact that what is the intrinsic economic value. Using that entire tokenization blockchain into real estate would make a lot of sense because there is an intrinsic value. You mentioned assets, of course, all kind of assets, but again, since we are talking in context of real estate, so that makes a lot of sense. You also mentioned about the next one is liquidity. Second is, can I take a loan against that? So will that be
staking or lending? Yeah, you can lend your tokens. That's the beauty of the second one. Apart from the secondary marketplace as an exchange, you can even lend these tokens to an NBFC or a private equity company with a particular interest rate, so that you lend it out for 1 year and you repay back and unlock your tokens back. That's what the whole mechanism of this entire token is. It's not just meant to be, as I said, fractional real estate is half baked. It's not fully done. It's not fully done. So we need to fill the gap of solving liquidity, solving lending protocol, lending system, and trying to bring that instant liquidity, so that as a retail investor, as you mentioned, example, mutual funds. Why mutual funds are performing better than real estate, fractional real estate? Simple, right? The questions were not answered yet. When we got these questions answered, especially the experience point of view, the trust point of view, and the liquidity point of view, then I don't think, I think even real estate, we've seen that in post-COVID, it's one of a great hedge investment opportunity compared with any other asset class, even in COVID. People are aware of it. People know that, but unfortunately, they don't have an affordability. They don't, because it's a massive capital intensive asset. They don't have an option to liquidate it. They don't have an option to get a trust and transparency. still it's controlled by central systems, right? That's what we're solving.
Okay. You use the word fungible token. Please explain fungible.
Okay, so even before understanding this terminology or jargon of fungible, non-fungible, just put aside in a layman terms, think of that a divisible value, divisible number or undivisible number, right? Let's say, example, there is 100 rupees with you and you split that into each one rupee and give it to 100 members, which is fungible or divisible.
Okay.
Whereas you have a gold, a piece of coin, where you only give that gold to one person. You can't split that like 100 pieces and give it to you yourself until you go to someone and say split that. But that's gold is a NFT, means non-fungible value or instrument. Whereas here, come back to token. A token in our case, a debenture. Traditionally, there is a debenture. Debenture meant to be what? There is a private limited company. You bought a debenture in that company, but the company holds an asset, which means the company is holding that asset as a title deed and is non-fungible, or undivisible. Whereas you hold a portion of ownership or economic value as a debenture is fungible.
Got it. So if I understand correctly, anything that needs to be divided, or the use case would be that if something is divisible, then it's a fungible token.
Yep.
Otherwise, it's a non-fungible token.
Non-fungible.
Maybe a piece of art or something that needs to be used in its entirety. Again, people may argue that no, I want us because let's say Madonna's new song, for example, is she creates a song and she creates
Copies of it.
copies. Okay. So she will
Copies
create non-fungible tokens there, or she will create fungible tokens?
No, fungible tokens. When you distribute that song into of copies is fungible.
Okay.
But the rights of that song is with Madonna. Is non-fungible. Yes, exactly.
Okay, got it. That explains it quite well. Thank you so much. This has been an excellent session, and I'm sure all our investors have gained good understanding of not just blockchain tokenization, fungible, non-fungible token as words, but its application and how it would matter to them, which is the most critical part, and why they should potentially now start demanding whatever they are investing in, right, should be in this sort of a format to make their lives and everybody else who's involved in that particular transaction, their lives easy. Thank you so much. And we request all our investors, the video, subscribe to our channel and comment. If you, of course, if there are any questions that we've not answered, or if you have any further questions for Surya, please comment and let us know. And we will request him to answer those questions for you.
Thanks.
Okay. Thank you so much. Bye.